Which one is best for your portfolio right now? Growth stocks or value stocks, and which one is going to be the best category for 2024? Let's go ahead and break it down. I think the easiest way to start this conversation is define what is a growth stock and what is a value stock, and then give you the conditions and scenarios in which one could succeed more than the other, and then what are the downsides of each of these types of stocks. So the first one is this. Let's start off with growth stocks. These are stocks that are expected to grow faster than what the market average could be. Let's say that's anywhere around 7 to 10%. So if a stock is consistently making 15, 20 or more, that's usually considered a growth stock. Now, generally, these tend to be tech companies, and that's because tech companies just attract more attention, they attract more money, meaning that investors want to have them because they want to get the next greatest thing. And also, those companies can borrow money to succeed quite well and start to grow at an expansive rate. Until those conditions start to change. So generally speaking, this is not in every single scenario, but usually when the economy starts to slow down, growth stocks fall off a cliff. Also, when interest rates rise, they tend to fall off a cliff as well. That is exactly what we saw in 2022. That is not what we are seeing in 2023, even though the Fed has paused interest rate hikes. But during the first half of this year, they were increasing interest rates. So it's not a one-to-one scenario every single time, but that is a general environment. I like growth stocks. You probably like growth stocks. This would include companies like, and I made a quick list, Google, Amazon, Microsoft. Eli Lilly would technically fall in this category, and obviously a company like Nvidia would also fall into that growth stock category. Well, what about the value side? Value stocks are those that are considered to be undervalued by the stock market. Say a company is right now trading at 200, but the value of it, based on what they are doing, is really worth 200. So you're trying to find a company that is overlooked by the stock market, and they don't tend to perform as well as some of those growth stocks, at least in the beginning. The idea here is buy them while they are cheap, buy them while they're undervalued, and then over time they will perform as good or better than some of those growth stocks. A list of growth stocks, I just pulled this from an ETF, the Vanguard Value ETF, that's VUG if you want to look for that ETF. I just pulled a list and just look at the top 10 holdings. They would consider a value stock companies like JP Morgan, Procter & Gamble, that's PG, Berkshire Hathaway, and a company like Broadcom, AVGO, which is a company that we did talk about, that I did consider that was overvalued, that is doing quite well, and we have talked about it inside our members only, and we've broken that company down a few times inside our members only as well. But which one is right in this scenario? Number one, always remember to diversify. I think you should have a mix of each of these. I could argue that you could have both Nvidia and Broadcom. One is considered growth, one is considered value, but they're both in the tech space. Right, so it depends on really what you're looking at and what you consider value. I think that's the hardest thing. What do you consider to be a value stock, and how are you coming to that conclusion? Inside of our members only, I have a spreadsheet to help you to figure out whether something is undervalued or overvalued. But that's just how I look at it, right? Vanguard can look at it differently. Warren Buffett can look at it differently. You can go to Morningstar, a research firm, and they can look at it completely differently. So that's the first thing. It makes it very difficult to determine what is truly undervalued and what is not. But in a general scenario, value stocks tend to do well when interest rates are high, which is the scenario that we're in. They tend to do well when the economy is looking like it's going to slow down. That's debatable. The numbers say the economy is not slowing down, but there are so many people that think that there's going to be a recession now in 2024. That one is up for debate. And then you have the inflationary environment. Inflation is still relatively high, but it is starting to come down. We found out today that inflation came down just a bit, and that was better than what economists expected. So it's really sort of a toss-up. I think I would have to, if you had to nail me down and just had to choose one, I'm probably going to choose growth stocks. And to be honest with you, it's probably because I have a bias for growth stocks, just because in my investing lifetime, right, since I've started investing, it's primarily been a growth stock place, right? Apple has been the most valuable company. Microsoft has been the most valuable company. And that's just how, that's just the environment I grew up in, right? For some people who are much older, it was ExxonMobil that was the most valuable company on earth. And that is what they grew up in, right? So they may have a bias in that area. Another reason, though, why I tend to lean towards growth stocks, and they may not have a great year next year, they didn't have a great year last year, is because I think they're easier to define. I think that is really why I tend to lean towards growth stocks, because I can easily see, hey, Netflix, you beating the market by 1,000% in the last 5 years, is easily a growth stock. We can all see it. We all know it. There is no real debate. A value stock, I can say a stock is valued at $5. You can say it's valued at $25, and we can go all over the map on whether or not the stock is valued. We see so many people argue about GameStop and AMC and all these other stocks, and they truly believe that they are value stocks. They believe it's going to be the next best thing, and they're not, right? You see the Mullen Automotive cult around how they feel about that particular company. But again, I can't convince them of that, right? And how they determine what valuable is different than what I determine value is. And that's just something that we may not reconcile. And I think that is what makes it difficult to say that value stocks are going to be the absolute best thing. Also, for the stocks that I have considered value stocks outside of a company like Broadcom, but take SJM, Smuckers, hasn't done well, right? They were more in the value defensive category. People who are looking at companies like Hershey. Hershey is down close to like 20 or 30%, and that has, in my research, has come up on a whole bunch of value stock lists, and this is a value buy right now, according to some. I don't know. I don't really think so, okay? Because I understand the concept that you want to buy something that's cheap, but what if it continues to slide, right? I don't know if I can be super comfortable with doing that. So for me, I think the answer is growth stock, because it's easier for you to identify. Just because the environment isn't perfect for growth stocks doesn't necessarily mean that growth stocks won't do well. And again, we've seen that this year. Interest rates have still gone up. Inflation is still pretty high. These are supposed to be places where growth stocks don't do well, but they have. And Nvidia is the leading example of this. So for me, it's growth stocks, but that does not mean that it is growth stocks only. I want to be very clear there. I have diversification in my portfolio. At least I try to have diversification as much as I can. So I do have some value stocks. We talked about those on Insider Members Only. I do agree that Broadcom is a value stock as well. And there are other ways that you can add these companies into your portfolio. Another way is through an ETF. An ETF is an exchange traded fund that is a group of stocks packaged together, so you don't have to go through and pick what you think is the best one on your own. You can outsource that, right, and have Vanguard do it, or iShares, or any other company out there. Again, the one that I mentioned was VUG. That is the one, the value stock ETF. And there are other ETFs that you can pick and choose from. So that is what I would look at. I'll also say that I've done a video on some of the best growth stocks and some of the best value stocks, and you can check out those videos right here.